All right, here we go. Morning, Braden. We'll get started here just a little bit after 9, or after 10 o'clock. See how many people log in here. Hopefully the stream is a lot smoother. Let me know if it's not. But I bumped up the internet connection and spent a lot of money on a new computer system so that this goes a little bit better. Let me get some more coffee. It's a lot less choppy. Okay, good. I started putting coconut milk in my coffee. Game changer. Wow. It's amazing. So good. Also, I really wish I could play popular music, but the man's holding me down. Can't listen to music now on these things. Sucks. Hi, Haley. You guys are, I gotta get fancy for you guys. Gotta make sure that business doesn't stop. All right, 10 a.m. We're gonna wait for a few more people here. A couple more minutes. I know Miranda. So I got banned 2 weeks right before break when I started playing the popular music, and they wouldn't let me live stream for like a week. So I kind of want to make sure that that doesn't happen. It sucks, but I guess I just have to deal with it. But it's also a way to like kind of keep it entertaining. Like I'm sure you don't want to just look at me and hear my voice. You want to see me dance as well. I'm a good dancer. Thank you, JD. All right. It's about 10:02. We're gonna get situated here and start with banking and checking. Let me just line up a couple things here. All right. Banking and checking. All right. So this class or this unit, we're just gonna go over things like checking accounts, bank account or savings accounts. I guess I could use non-copyrighted music, but I'd need to buy a subscription for that, which actually I could do. I actually might have a subscription. So for banking and checking, we're going to go over things like credit cards, and then also a little bit into loans, but not too much. That's actually, I believe that's the next unit. But we're going to fly through banking and checking, maybe break this up into two different things that you guys can watch today, and then also Monday. Apparently, we don't have school tomorrow. So we're going to fly through this stuff. And then if you want to rewatch part of it or just look at the notes, I'm going to be posting these slides as well. I appreciate you guys actually logging in and watching this. It's nice to see. All right, so banking and checking. I'm sure you guys have all seen some of these. I use Summit and I use Monona State Bank. I used to use US Bank for my business. I use Chase for my mortgage. My daughter has a UW Credit Union account. Associated Bank I've never done anything with. But BMO Harris, actually, that was M&I Bank, and I used to use that as well. So we're going to be comparing different ones between credit unions and then also banks. All right, so how are they different? Credit unions. Credit unions are not for profit, right? They don't have an owner, some family or like a group, a holding group does not own a credit union. Banks are for profit. Credit unions, you need to have a membership. And usually, like for some credit union, I think it's like a $5 savings thing that you need to maintain. So it's like you need to have a membership for a credit union. Anyone can join a bank. With a credit union, there's fewer products, and with a bank, there are more products. Credit unions are less accessible. Banks are, all over the place. Like, for instance, U.S. Bank, I could go to a U.S. Bank branch in Chicago or in California or New York or something like that, like Bank of America or what are some other ones? BMO Harris Bank. Like they're spread out over the country, whereas credit unions are they're regional. Like some credit unions like here in Milwaukee, and there might be like a location in Wausau or something like that. But they're becoming more and more popular just because there are fewer fees and better rates. Credit unions, because they're membership owned, and they don't have to pay shareholders large dividends to keep them going and to keep people interested in investing in them. They actually will offer better rates and fewer fees. Banks, they're a business. They have shareholders that are, a lot of these are publicly traded companies that they have to pay dividends out to keep people investing into those companies and to keep their, if a family owns it or a group holds it. What do you want me to go back to? This one right here? All right. There are with banks, they pay the shareholders dividends. With credit unions, the members they pay the dividends too. All right. I'm not if I get a dividend from some credit union, I'm not expecting a lot, but if I own stock in the company that owns one of these banks, I'm expecting a good dividend in my stock. Each one are insured, the FDIC for banks and the NCUA for credit unions. And we'll go over kind of what that means and what those different institutions are. All right, here's another look at this. This is kind of the same information, just written out. Structure for banks, for-profit institutions, credit unions, not-for-profit. Rates and fees. Banks pay lower interest rates and have higher fees. Like, for instance, For a bank, it might be if you don't have a minimum balance of $500, you might have to pay $10 a month or $5 a month to actually have a bank account, right? It costs you money the less money you have. Credit unions tend to pay higher interest rates and have lower fees. Insurance on your funds. Your funds in the bank are insured by the FDIC for up to $250,000 per account. Per account. With the NCUA, it's up to $250,000 per customer. All right. So let's say the economy just tanks or a bank goes under, right? And or a credit union goes under. The FDIC will actually replace those funds if that bank goes over. Or if that bank goes under, that's insured. Customer service less emphasized on personal transactions for a bank. With credit unions, it's more about the personal people in your community. It's based in the community for credit unions. Physical locations, large national banks will have many branches across the country. Credit unions will usually have fewer branches than banks, but some participate in a shared branching network that allows you to visit physical locations to partner credit unions. Technology banks, particularly large ones, will usually be quicker in rolling out new technologies. Although some credit unions are tech savvy, generally credit unions can lag behind. Now, I don't know about you guys, but before I ended my relationship with US Bank and BMO Harris, Summit Credit Union's app was far superior. Just as far as like depositing funds and taking a look at your accounts, it was more intuitive. But you know, big banks will get that technology first. It's just, I think credit unions have done a far better job as making it look and feel more intuitive and better. All right, I'm going to move on. You guys feel free to pause too if you need to. Or what's the FDIC versus the NCUA? Let's cover the FDIC is the Federal Deposit Insurance Corporation, $250,000 per account. Insures most accounts like checking, savings, CDs, and money market accounts. The NCUA is the National Credit Union Administration, and both of these will be on the test. $250,000 total per institution, right? Like if I have 4 different accounts at Summit Credit Union, they're only going to insure me for $250,000. But if I have 4 different accounts for the FDIC or for a bank, the FDIC is covering me for all 4 up to $250,000 per account. So it's a good idea actually. Like let's say you have $1 million. You don't want to put all $1 million into an actual one account, right? No matter what you do, you want to split that up between different accounts, so that way and between different banks. That way, if something happens to one of those banks or one of those accounts or whatever, you're covered by the FDIC or the NCUA. So don't put all your eggs in one basket. That's kind of one of the reasons why you want to split that up. All right, banking. So a checking account, it's separate from a savings account. It allows customers to write paper or electronic checks that withdraw from the account. And I don't know how many of you guys have actually written a check. We're going to go over that a little bit in this unit. Actually, if we were in the classroom right now, I'd hand you out a packet of like 3 checks or 3 sheets, and then we'd actually write checks together. So we're not, I'm not going to be able to do that, but I will show you what they look like. Oh, goodness. Getting calls. For savings accounts, it's a service offered by a financial institution for customers to deposit money. It's federally insured by the FDIC, and actually Quinnell put this This is one of his slides. I think he either found this meme or he made it himself. Instead of splitting the dinner bill, we should just open a savings account together. Generally I go for girls like this, so that makes sense to me. But stay away from that, please. All right. Account features. Money market account. Money market account is like a savings account. You need a higher balance, but it pays more interest, but you have limits to the withdrawals. With a savings account, you can have a savings account. I can open a savings account for my daughter with $200 or $100 and just put in a little money every single month into that savings account. And build it up. With a money market account, you might need $5,000 or $10,000 or $20,000 depending upon which one. And what they do is they actually put this into other investments. Okay, they use a savings account. They use the savings accounts to make money, but it's usually on a little bit safer stuff. They're paying out other people. They're running their business. They're making loans with those accounts. With a money market account, they're invested into a little bit riskier stuff. Yeah, Joey, I'll post the slides as well. They are going to be invested kind of in more of the high profit products that the banks work with, and banks or credit unions. But they rely on that money for those investments. So if you put in $10,000, they're going to make sure that you keep in $10,000. Now you could put in $100,000, but you can't. They're relying on this money to fund those projects and those products. And so what they're going to do is limit your withdrawals. So you can maybe only take out per month money from that account 2 or 3 times per month, because they're actually counting on that money. They're using that money to make money. And they're going to pay you a little bit more for that convenience and for that limiting of withdrawals. Now, so it's like all the buckets, right? I'll have my checking account for my bills. I'll have my savings account for like the rainy day fund, and then I'll have a money market. It's just these buckets that you fill up that you need to when you start saving and start doing stuff. When you first get a job, you're going to fill up your bills bucket. And then after that, you're going to fill up your savings, your emergency fund bucket. And then after that's filled, and you can still fund your bills one, you're going to fill up maybe a money market one where it's still liquid, but you can't take it all out without canceling that account, and you can't take out money and a whole bunch of times per month. So you still have access to that money, but it's just a little bit more painful if you do take it out. And then you fill up your CD bucket, then you fill up your stock bucket, then so we got these buckets that we're going to fill up in a progression. And money market is, for me, that's kind of like my third bucket that I fill up. This new app will cost us $1.99. Richard, get the checkbook. Oh, God. Quinnell is hilarious. I miss that guy. A CD, okay? A CD, back in my day, a CD was like a hot Tupac or Notorious B.I.G. Compact disc that we used to put in this thing. It was circular. You press play and it like goes, but it would fall out of your pocket if you're like riding your bike, and then it would break, and that wasn't fun. Then they got these like skip ones with like the skip technology, so you could like still do some sweet jumps on your bike, and that was fun. And my Tupac CD wouldn't, or Snoop Dogg CD wouldn't skip. But this is actually a certificate of deposit. Okay, this requires a higher balance. Like you might be able to buy a CD or get issued a certificate of deposit from a bank or a credit union for $1,000 or $2,000 or $5,000. But you can't touch that money without penalty for about, whether it's 6 months, 9 months, 18 months, 2 years, 3 years. They put a cap on the time where they are utilizing that money. They're going to pay you a little extra. They're going to pay you a little extra money for, like as far as interest, to use that money, that guaranteed amount of money to do long-term projects like building projects and things like that, like loan it out for construction loans. So that's what the CD product is for. So after my money market account or if I have like $1,000 extra or $2,000 extra, I might put it in a CD because I know my emergency fund is filled up, my bills are funded, all that stuff is. I don't need this $2,000 for um, like 20 months or 18 months or 3 years. I'm okay with that just sitting there. Now, if I take that out, I'm going to pay a penalty, and I will be able to get that money out, but I'm not going to be able to get all of it out. And it's not going to be a huge penalty. They're not going to take half of it, but they're going to take a percentage of it, right? There's going to be a fee for that. But it is still a little bit liquid if you really need that in a pinch. All right, this is just kind of a look. These are old mobile accounts. These are not my accounts. I think we just found these on the old internet. This is what the Chase one looked like. This is what Associated Bank looks like. You guys all know what these look like now. When they started this class, they really didn't look, a lot of people weren't using them yet. This is a check. All right, so the parts of the check that you're going to need to know. Who is writing the check, right? That's the drawer or the payer. The payee is the person you're writing that check to, right? So, like, for instance, I'm going to pay Monona Grove School District money for my daughter's lunch. So I'm going to write Monona Grove School District on there. I'm going to put the date. I'm going to put the amount, $30, and then I'm going to write out underneath, it says pay to the order of, I'm going to write out $30. Like writing, not just 30. You need to know what the bank is, that's the drawee. The bank routing number, that's a 9-digit code. And then the checking account number, that could be 10 digits or it could be 20 digits, whatever. It's going to be different for every bank. The bank routing number, though, is the same for that bank. So U.S. Bank, no matter where I open up a checking account in the United States, it's the same routing number. For Summit Credit Union, it's the same routing number for all the branches. And then you have like the check number, which is what number. I actually I got a checkbook here for the first time in like 5 years because one of the people I do business with only wants to get paid in check. Okay, great. Thanks. They won't take Venmo or anything. So number one, you got the date up there. 2 is the payee. 4 is where you write it out. 3 is where you just write out the dollars and cents. So if 3 and 4, if they don't equal, let's say I write $8.15 out in the number, but it says $9.15 where you write it out, like you spell it out, number 4, they're going to take number 4. They're going to take what you actually wrote out. All right, that's what will win in a like if there's a difference between those two. The memo, lunch with friends, and then I sign it number 5. All right. Also, we got the 9-digit code right here. That's the routing number. Magic number is 9. And then we have the checking account number and the check number right here. All right, this is just another example. Neil Armstrong. Who is that, guys? All right, so this is where we would actually go and write checks. But I'm not going to have you do that. You can go back and do that yourself if you want. Okay, so then we have checking account features. An NSF check, if you get a check return, NSF, that means there was not enough money in your account to cover the withdrawal. All right, so non-sufficient funds. Sometimes they will fund that check. Let's say you have $100 in your checking account. You write a check for $120. Depending upon your agreement with your bank or your credit union, they might either cover that extra $20 and then charge you an overdraft fee, or they might just reject the check in its entirety, and then they send that back to the person who you gave that check to, and they say, this person at NSF, that money is not in your account now, okay? And they charge them a fee. Well, they send you back actually like a check, right? Like, so this is a check. They will send this back to them, and or like a copy of it, and they can submit it like I think up to like 2 or 3 times over and over again until there's money in the account. So you're until you fund that account, this thing might be hitting it, and you might be getting charged $30 every single time. It's not. It's like um, it's being resubmitted by the person that you gave the check to. So you got to be really careful. Don't write checks you can't fund. All right. So very, very important. An outstanding check is a check that has been written but has not yet cleared the bank. So I'm right now, this one from the Lake Monona Sailing Club is outstanding. I just got this in the mail. It's to me, it's for the correct amount. It is signed and dated, and I need to go and cash that, right? I need to go and deposit that into my account. I'm assuming they have enough funds, and then once that clears the whole central bank system, that goes from outstanding check to a canceled check. All right, and I'll get to that. The difference between voided and canceled. A canceled check is one that actually cleared the system. It was funded, and then it gets like filed away. They used to actually send you the checks back. If you wrote a check, you give it to the person you're paying. They would put it into the banking system. Then it'd actually get given back to me for my files. So that's the way they used to. Now they scan it, and it's just uploaded on the interwebs. Okay, so a voided check. Let's say they made a mistake. Let's say Mr. Paxton made a mistake on this check. He would, I don't want to correct it. I'm just going to write void in big, huge letters. Okay, so like I would take a marker or a pen. I don't have one right now, and write void as big as possible on that check. All right, void across the top of it, and then I would file that away. A canceled check is one that, and then I'd rewrite another check. A canceled check is one that has cleared the bank and funds withdrawn from your account. So that is one that's gone through the whole process. A canceled check is not a bad thing. A canceled check means it just went through the entire banking system and it's done. Okay, that's a canceled check. A stop payment is, let's say Ward, let's say Mr. Paxton here wrote me this check and it was lost in the mail, or I can't find it, or whatever. He would have to put a stop payment on this. So he would call up the bank, and it might cost him $10 to put a stop payment. So if this hit the banking system, if someone found this somewhere, it would actually like be rejected from the bank. You know, if some other person found this, they put this into their account, it would not clear the bank. It would be stopped, and they would go back to the person who put that in their account and be like, dude, what are you doing? Hot. All right, endorsing a check. So like a regular endorsement for a lot of people, like for instance, I just signed the back of this check. This is right now, this is a blank endorsement. This is just I'm signing this, and I can put this into whatever account I want. And you have to do it within the top like section up here, and it has a little part where you sign it, and now they have like check if this is mobile remote deposit or has been deposited remotely, and I would scan it, and that's endorsed. Multiple is signing it over to someone else. I want to sign this over to JD, so I'm gonna sign my name, then I'm gonna write to JD Christensen, right? And she would then I could give this to her, and then she could endorse it and deposit it into her own account. A restrictive, for deposit only. Instead of me taking this, I could take this to the grocery store with just my endorsement and say, like, give me cash for this. And if they would do that, they would take the check and, you know, I'd sign it over to them or someone else, and they would, you know, give me money for it, give me cash. But if I say for deposit only into this checking account, right? Like I write my account for deposit only, Summit Credit Union account 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever. that this check could only be deposited into Summit Credit Union for that account. If you give a check to a bank, they will actually stamp it with, it'll say for deposit only. They don't sign it, they just stamp it for deposit only. US Bank, this account number. That is a restrictive one. Correct misspelled name, you sign it first the wrong way and then sign it yet again using the correct one. So if they were to put Don Hull on this, I would sign it Don Hull, and then I would sign it Ron Hull, right? You can also, you don't really have to sign it. Banks will still accept checks that are unendorsed, that aren't signed here, or they aren't signed here, but they might have to, it'll take a little bit longer to process throughout the banking system. All right, let's see here. All right, so we would then go through different endorsement things where I would have you guys write those out. All right, deposit slips. If you get cash from grandma and grandpa or a check from grandma and grandpa, you would fill out a deposit slip. You would do your cash up here, and then you would, like, if I got one check, I would write the check number right here, $750, and then I'd write the amount. Then I do all the totaling, the subtotal. I might take some cash out. If I take cash out, I'm gonna have to sign right here, and then I put the total being deposited right in there. If I have more than 3 checks, right, or if I have more than 2 checks or 3 checks, then I flip it over on the back and I write all the check numbers here, and then I do all the total, and then I put the total right in here, and then I do the subtotal again and less cash received, and I do that. That's a deposit slip. I won't have you fill one of those out because, well, we're not in the same room. So that's a deposit slip. All right. So this is where we would go practice filling out deposit slips, which you can do that if you want. All right. Let me just see what slide we're at, what time it is. It's 10:30 right now. We're at slide 37 of 62. Let's just do like a couple more slides, and then we'll be done for the day. All right. So pulling money from your checking account, we got checks, debit cards, and then mobile payments and ACH payments. All right. A debit card allows funds to be withdrawn directly from your checking account. How is this different than a credit card? Well, you're actually pulling it from your checking account. Credit card, you're using other people's money. You're using a bank's money. You're doing this on credit. You have to pay that money back in a certain amount of time, depending upon your terms, at a certain interest rate, which we're going to go over. But a debit card, if you have $100 in your bank account and you go to Quick Trip and you swipe your card for that Snickers bar, it's going directly out of your checking account. All right. But here's the deal, though. If you do that, if you swipe that out, if someone takes your credit card or your if someone takes your debit card or your debit card number and they charge funds to that, or if they take those funds out, you lose that money until it goes through the vetting process to see that that was fraud. All right, so you might not have that $100 if someone takes that. So you got to be very careful with your debit card because that's going directly from your checking account. We need the checking account in order to pay bills and do other things with. So if you lose your debit card or your debit card number, or if you're online shopping and that gets hacked, you have the potential to lose that cash until everything gets cleared out of the system and they realize that that's fraud. All right, let me just take a look here. All right, so this is the last slide that we're going to do for today. Pros and cons. Pros, payment is immediate, so you cannot possibly go into debt. That's kind of wrong. Sometimes they will let you go if you have overdraft protection. They might let it go through, and then they're going to charge you an overdraft fee. Business debit cards, they will let it go through, and they will charge you an overdraft fee. Personal debit cards, especially for maybe like youth, if you only have $13 in your account, right, that someone's funding or you're funding, and you swipe it for $15 at Rocky Rococo's, that's not going to go through. Cons: there is no fee. There is no free borrowing period, in contrast to a credit card. Other pros: you don't have to carry a checkbook or show ID. Many cards include a photo of you. That they're kind of going away from that, though. There are some kid ones that are coming back where they'll actually put your kid's face on it, so that the person knows that this is their debit card. Instant cash from ATMs and cashback options at some stores. You don't have to wonder if there's enough money in your account. The card can be set up to prevent overdrafts. Absolutely. Other cons: should not be used to shop online due to high risk of theft. They're getting better with that, as far as fraud and online thefts. Personally, I use my debit card for some online shopping, just because I hate putting things on a credit card. Just hate it. I stay away from that as much as possible. I know my limitations. I'm not very good at budgeting sometimes, and if I have their credit available, I might go after it. I might have a weekend. Some banks charge transaction fees for using debit. Not a whole lot anymore, but some definitely do. Some smaller banks will as well. And there's no option to withhold the payment in the event of a dispute in a merchant or in contrast to credit cards. So, for instance, if I order something online on Amazon and it comes to me and it's not what I wanted, like, my funds are gone until that gets cleared up. In a credit card, my funds aren't gone. Someone else's funds are gone, right? The credit card company's funds are gone, and they will fight tooth and nail for you to make that right, or to get that process going so that you don't have to pay for it. But with a debit card, your funds are gone. So hopefully you have enough funds to cover your bills after that, if you do use that debit card. All right, guys, we're going to end right here. Thank you guys very much. I appreciate all 10 of you that logged in for the time. Monday, 10 a.m. I think we're going to have a class again. I'm pretty sure. If you want to log in for the live thing, that's great. If not, I will post the link on it as well. I miss all you guys. I hope you're having a fun time. And when we do the review, I kind of want to talk about the whole how we're taking the test. Thank you for the 77 of you out of 90 that took the test on time. The other guys that didn't take the test, we got to have a serious talk. And we are going to figure out a plan so you guys can take that test, because I actually locked the test. Thank you, Braden. I appreciate you logging on. JD, everyone, you guys have a great time. Miss you guys all, and we'll see you guys later. Bye.